What factors will impact home affordability in the years to come? If you ask this question, you'll probably get answers like interest rates, building supply materials, a number of homes for sale. But I was reading The Economist last week and came across an article that has me concerned about the cost of home insurance, which is one of the components that homeowners must carry. Hey guys, it's Evan Swanson here from Guild Mortgage, and here's the article I came across. It had some staggering information in here. For example, from 2000 to 2009, there were 3 thunderstorms that cost the insurance industry $1 billion at current prices. Then from 2010 to 2019, there were 10 storms. Now, since 2020, there's already been 6. The reality is that climate change is causing more damage for property owners, and that is ultimately trickling down to home insurance providers, and that will ultimately be impacted by home insurance. I wanted to share some basics of homeowners insurance and give you some tips on how you can hopefully create better insurance for you and your family. First off, when you take out a mortgage, these are all the perils or types of damage that mortgage companies require you to insure against. Now, you don't need to memorize these because most homeowners insurance agents already know this. Now, in terms of the amount of coverage, lenders require that 100% of the replacement cost of the improvements be covered. Now keep in mind, when you buy a home, you're buying the improvements, the structure of the home. You're also buying the land. You don't have to insure the land because if something happens to your house, the land's still going to be there. Now, if you have a lower loan balance relative to your home's value, then in some cases we'll allow for less than 100% replacement costs. Now, in response to more expensive insurance requirements, we will likely see more and more homeowners decide to take on a higher deductible. Of course, the deductible is the amount the homeowner incurs before insurance kicks in. Understand that we require that the property insurance coverage amount or the deductible be no more than 5% of that coverage amount, okay? So in other words, if you had $100,000 worth of coverage, for simple math, the deductible cannot be more than $5,000, okay? So you'll have to keep that deductible under that 5% amount. Now, condo insurance is interesting because typically a condo building will have a master policy insurance that the HOA carries that covers the structure, and then the condo owner will obtain what's called an HO6 policy. Now, we're finding that many condo HOA boards are choosing to increase the deductible for specific perils, notably water damage. Okay, windstorm and water damage is one we're seeing. So the cost of that is increasing substantially for condo owners, and therefore they're increasing the deductible to make the cost lower. Now, if you're looking to buy a condo or you own a condo, you may want to make sure your HO6 policy specifically addresses that specific peril. You can effectively buy supplemental insurance that will reduce your risk in the event that there's a major water damage incident. If you are looking for other tips about getting better home insurance, please contact us today. We'd love to be a resource. And if you have any other topics you suggest we record videos on, drop them below. Thanks.